Hey everybody, it's David McCoy, Ochimo Properties, Real Estate Matters. I thought I'd do a quick video. I've done a few of these. Some of them I have, they're up on my channel, but I have not shared a lot of them. This is a quick sort of where we go from here kind of video about commercial real estate after, or where we are right now anyway, with the pandemic and the unrest and the things that have been happening in our country. So I sat in last week, about a week ago today, on a seminar that, or a webinar that Dr. Lawrence Young, the chief economist for the National Association of Realtors, had, talking about what we can expect with commercial real estate. So there's some kind of broad trends. I mean, just sort of in a nutshell, during the second quarter, when the pandemic first hit and everything shut down, the GDP of the country dropped about 80%. So it was not really a surprise, but it was a big drop. And we are recovering from that. So the residential real estate market is doing really quite well right now. There was a pent-up demand. There's a big shortage of inventory, and so actually prices on residential have actually gone up, and so they're doing quite well. The commercial real estate market is lagging. The commercial real estate market is just tied so tightly to the economy, and our economy hasn't recovered yet. We still have high unemployment, but some things that have happened, which I've talked about some of these in my previous videos, and it's what you would expect. I mean, you know, when you hear it, you'll think, yeah, that makes sense. So with so many people working from home, people have gotten used to working remotely and doing virtual conferences and those kinds of things. And so that's going to affect things. And with so many businesses shutting down, some of them just are not going to recover. The restaurant market has been hit very hard. Gyms have been hit very hard. Retail in general has been hit very hard. So those things are going to struggle, and we're not through all of that yet. Some of those people are still hanging on, but they probably will not make it. So we still have some economic problems to overcome. But kind of from that, just sort of in broad terms, what we have seen are some movements, which again, when you hear them, is going to make kind of sense. So we're seeing a change in emphasis from big cities to smaller cities. A lot of people during the pandemic, they found that being in tight quarters with a bunch of people, they were concerned about that. Also, it was harder to get supplies in a lot of those cities because there's such a dense population. Being able to get enough in there was also somewhat of a challenge. And then following in the unrest that we've had in our cities, you know, a lot of people just, you know, don't really want to put up with that, and they don't really feel as safe as they once did. So we are seeing a move. Some of our largest cities have seen a lot of people moving out, and you know, for a while we weren't sure if that was permanent or not. It appears that a lot of it is going to be permanent. People are moving, and this is a general trend in the country. We're seeing a migration from the cities to the suburbs. So a lot of our large cities, people are moving out and they're moving into the suburbs. That is being reinforced by the fact that so many people are now considering working from home instead of in the office. And that in turn has increased the demand for office size. The other trend is moving from large cities to smaller cities. Again, sort of the same factors which are driving that are driving the shift from larger cities to smaller cities. People feel like it's, you know, there's not as densely populated. It's maybe less hectic, less risky to do that. And so we're seeing this change where people, especially the younger demographic, and by that I don't mean like early 20s, I mean maybe mid to late 20s to maybe 30s. A lot of those guys who'd been living in cities and living in small spots, some of this was happening demographically anyway, because our younger people have been waiting later to get married and have children. And so as they have begun to have children, there was a change anyway where people were wanting to move where they could have more space and less densely populated and those kinds of things. So we had that shift from the city to the suburbs going on, but the events of this year have accelerated that. We're seeing lots of people, they're moving, they want larger houses, they want to be in the suburbs, they want more space, they want to not be in such densely populated areas. So those are sort of the general trends that are happening. So for commercial real estate, they're saying now, by the markets, the office market is going to be hit, and it's going to be hit pretty hard. It may be a while before it recovers. Office properties are not really expected to be doing very well for a while. Same thing with retail. Retail is also suffering, and a lot of that, besides the things that have shut down, a lot of people had gone to doing much more online shopping. And they will probably continue a lot of that. People who maybe had not done much before got accustomed to it. And so I think that we'll see that. So we'll see the retail decreasing, we'll see the office decreasing. The industrial will probably continue to do pretty well. There may be some, it could go down a little bit. It could also go up a little bit. I think maybe sort of steady, because the shift to e-tail will help the industrial to some extent. And so I think the industrial will continue to do okay. Hospitality has been hit very hard. A lot of hotels, Airbnbs, all these kinds of things. And then, going back again, restaurants, all those things have been hit very hard. Many of them had to be shut down completely. They may not be back for a while. Those properties are probably not going to do well. Multifamily, maybe down a little bit, but I think multifamily will probably continue to do well, especially if we end up with a situation where people are in more difficult economic circumstances. There may be continued demand for more apartments. Entertainment industries, those have been also hit very hard. We'll kind of see how that goes, but a lot of those things are currently saying that they may not reopen. So kind of in the general categories, what Dr. Jung saw is they expect that commercial properties as a whole, not by individual sector, obviously some of those will be higher, some of those will be lower, but he expects the prices for commercial properties as a whole to probably decrease around 10% this year. He also feels like next year we'll see another decrease of 3 to 5% for commercial properties as a whole. And hopefully, by the following year, by 2022, we'll be back where we are recovering from all of this. So that's kind of it in a nutshell. A lot of this, I think, are things that we've been talking about. The trends seem more solid as we go along. And so that's kind of the expectations for the commercial real estate market for where we are right now. So I just thought I would share that with you. I think a lot of us are wondering, how things are going to go and kind of where we are. And so that may be of interest to you. It also may be something, I think, as you're planning your businesses out, those are things you should take into account. So give that some thought as you're planning out your need for commercial properties, for either leasing or buying or selling, or whether you're landlord, tenant, whatever that might be. I think you need to consider those things. And And of course, if you want, you know, someone with additional input on that kind of things, and you would like, you know, me to take a look at that with you, let me know, and I'd be glad to help if I can. So that's it for this evening. Hope you all are having a great day. I'm hoping that you are surviving well during this unprecedented pandemic and unrest and the things that we're going through. But anyway, I will call it a night at that, and I will see you next time. Take care. Bye.